Welcome back to the Velocity channel, where this is your bridge to financial freedom. Today we wanted to go ahead and break down why this particular method of paying off your auto loan is going to be better than some other methods. But in order to do that, I've got to give you a little bit of background. It's not going to be too much because we're going to go into some calculations to where you yourself can be able to pay off your auto loan, your 5-year, your 7-year, and perhaps 1 year, maybe 2 years, maybe 3 years, depending on your situation. Before we get into that, like, share, and subscribe so that everyone around the world can know just how powerful Velocity Banking is for them. Without further ado, let's get into this. So number one, you have people that say, hey, make bi-weekly payments. Well, this is what the bi-weekly payments are going to look like on a $20,000 loan at 7%, and they got you at the 5 years, which is 60 months. That's going to look like this. So if you were to choose the monthly payment, they say go ahead and pay $396.02, and the total interest on that is going to be $3,761 at the end of the loan. Now, if you were to make bi-weekly payments, they say, okay, do a bi-weekly of $198.01, and then that total interest on that is $3,372 for a savings of $321. Now, some marketers will be like, well, you saved over $320 in interest. What do they mean by that? They mean $321, okay? And that's like a trick that marketers do. They do the over $300, or they may even do 320 plus to get you to realize, wow, over $320, but it's only $321. And so if you're okay with this, in saving just the $321, that's fine. There's a number two, right? Using windfalls to eliminate principal. So as soon as you get a bonus or anything like that, maybe an increase in your commissions, then you're going to go ahead and place that to principal, is what they say. And so over here, I drew a little face. That's the bank. And they're saying, yeah, give us your bonus. Thank you so much for your hard work. I'm just joking. They don't thank you for your hard work. Snowball method, right? Some call it goofball method, where you're paying the low balance first, right? And you know what? That's fine. If you want to pay the low balance first, instead of doing the cash flow index method, that's something that you would have to decide for yourself. But we've just found out that the cash flow index method is a little better, simply because it's going to show you the difference between inefficient loans and efficient loans, as we'll get to in just a little bit. So it's going to save you on those cash flow sucking loans. It's going to encourage you to eliminate those cash flow sucking loans so that you can capture that cash flow to pay down more debt and increase that cash flow. Okay, so number four, they say round up your loan payments. Round them up to a $10 amount, $50, or even $100. And that's fine as well. Number five, review any car loan add-ons. So we went over the types of interest car dealerships charge, right? Or the lenders charge for your auto loan. There's simple interest, there's compound interest, and there's the add-ons. In this case, we're talking about gap insurance, we're talking about extended warranties, we're talking about vehicle service contracts. So in that auto loan, you can find out, well, wait a minute, what are they charging me on? Do I need an extended warranty on this almost new vehicle? Do I need a vehicle service contract? If not, you can cross those out, and they're saying you can save money that way. All right, but I think that's limiting your choices, right? But it's up to you, okay? Refinancing that car loan, all right? Lower auto refinance interest rates. That's where you're getting out of this higher interest rate into a lower interest rate. We're actually gonna find out that you don't have to do that if you don't want to. And of course, you can go ahead and rent out your car. I don't think that needs an explanation. So instead of this, what about this? Looks much better, much better. So here we have a scenario in which we have the same numbers. $20,000 is going to be the loan at 7%. We've got $396.02 for easy math. We're going to go ahead and round that off to $396. Now, we have the line of credit over here. It doesn't matter the amount, folks. Please don't get caught up in the amount, because you know that once you eat up the principal, you also eat up the interest. That's right, because the principal is the host and the interest is the parasite that we want to get rid of, we want to cancel, and that's what we're going to do right here. So here we have an amortization table, and we've got the 32-month mark and we've got the 60-month mark. There's a reason why I'm pulling this out, because I want you to take a look at this, and I want you to take a look at your amortization for your vehicle and see if you can't do this very same thing on your vehicle, okay? So what we're going to do, because we get paid, let's say $5,000 in the income and then $3,000 is the expenses, it doesn't matter what you get paid. Let's just say you have a cash flow, because that's what matters, of $2,000. Why is that so important? That's important because the more the cash flow, the more rapid your debt is paid down. So let's go ahead and find out if we can't go ahead and pay this off. Let's say we pay this off in the 5 months it takes. Remember, you're using your line of credit as your new checking account. So as that $5,000 gets parked right there, the $3,000 in expenses goes out. That includes the loans, right? $2,000 is what's going to be paying this off. So that's why we do the formula of 10,000, right? That's the line balance, divided by 2,000. That's going to equal 5 months to pay that card off. Now, or that line of credit off. Now, do we have to worry about the $400 each and every month if we are paying our card this way, if we are paying our line of credit this way? No. So that $400 goes directly to our cash flow. We don't have to worry about that. We've switched the game up on them, okay? Now that we have replenished, after the 5 months, our line of credit to 10,000, now we can use it as a weapon of mass destruction towards this cash flow sucking loan, all right? $20,000 at 7%. We got to get rid of that. So let's say we do a transaction to the car dealer and we say, listen, man, I'm putting $10,000, not a down payment, folks. Oh man, you've got to hear me on this one. Not a down payment. Put it towards the principal. Don't let them trick you. I remember there was a 25-year-old walked into the car dealership, used the Money Max account to see if they could afford it. There was no hassling or anything. He said, this is what I can afford. The dealership was like, okay, nuts and bolts, folks. Okay, rubber meets the road when you're dealing with numbers. Now you're all of a sudden skipping to 32 months. So that transaction of $10,000 towards the principal skipped you ahead 32 months, and now the balance is $10,000. I use $10,232 because that's their amortization. This is their plan for your life. They don't want you at this number of $10,232 until 32 months. But you got there in 32 seconds. I'm just going to let it rest right there. I said they want you to this number of 10,000 in 32 months. But you got there in 32 seconds. Now, let's address the elephant in the room. How are we going to pay that back? Didn't you just add on to your debt? Well, yes and no. Yes and no. Yes, in that yes, we're going to have a balance. No, as if we're using our line of credit as our new checking account, and $2,000 is paying it off. So at the end of 5 months, and of course we are continuing to pay monthly, $396 each and every month. But at the end of that 5 months, guess what we have again? Another $10,000. And now, in 5 months, we can pay the rest of that $10,000 off. So let me get this right. They wanted you to stay in a 60-month loan, a 5-year loan, and you got out in 5 months? Now rewind this if my math is wrong. They wanted you to stay in a 5-year loan when you got out in 5 months. Check me on the math, folks. Remember, you got 5 months, okay, to pay that $10,000 off and use the line of credit like you should, okay? Then what we did is we said, okay, we don't want the continual bank plan because that's not the best for us. We're going to go ahead and subtract that 20,000 by 10,000 because we're going to deploy our line of credit and we're going to reach this status. Okay? The bank wants us there in 32 months. We got there in 32 seconds. Okay? And then on the next, okay, the bank wants us there in 60 months and we got there in 5 months. The bank wants us there in 5 years and we got there in 5 months. Zero. Once we replenished our line of credit. Folks, the reason why I keep doing this is because I know your brain is saying there's no way that can be true. There's no way, and I understand. But there's a difference between wealthy mindset and impoverished mindset. You already know it. And when Renee, I haven't forgot you, okay? We're actually gonna go ahead and make sure that your Velocity Banking worksheet is done right after this video. All right, we have not forgot you. We don't forget, folks. So I just want you to be encouraged, okay? I know the economy is doing some things that perhaps you're not used to. There's a McDonald's in San Francisco. It had to close down because it started raising its prices. But if it knew about Velocity Banking, I guarantee you it would have been a different thing. They would have moved some things around. And so that's why businesses are absolutely helped by the Velocity Banking as well, because it's giving them another mindset, a different and more wealthy mindset to gather the customers when their cash flow is straight. Because just like the blood gives life to the body, cash flow gives life to the business. It gives life to your bank account. It gives life. All right? So I'm going to go ahead and move out of the way one more time so that you can get a screenshot of this. Please rewind this. Please get this down, and you'll be able to not only pay your loan, your auto loan off, but your student loan, your mortgage loan, everything else. And of course, we can help you with that. We've been helping people with that. Velocity Banking debt elimination plans. All kinds of people have them. Over $976,000 eliminated, okay, or reduced. So I want you to know something, that we take this very seriously, and I want you to contact us, all right? We've got the description link below as well as in this video. So I want you to do something. Go ahead, schedule a call with us, and go ahead, get the class, enroll, make sure that you're taking advantage of our financial tools as well, okay? We got a brand new kit. There's no excuse to stay in that impoverished mindset, okay? Because it is a mindset. So folks, I believe in you. Now it's your turn. God bless you, and you take care.